My name is Robert Bonavito, New Jersey forensic accountant. This video is part of a series of videos where I discuss forensic accounting topics for educational purposes only. If this was a litigated matter, I would take a different approach, have different conclusions based on different facts and circumstances. Today I'm going to talk about tax advice when you're getting divorced. When you get a divorce, it's extremely expensive, and there's a lot of little things that you may not know, or your accountants may not know if they don't deal with divorce issues a lot. But the first one is, if you're getting divorced and you're paying a lawyer, you're paying accountants and everybody else, make sure you get itemized bills, because lawyer advice typically is not deductible on your tax return unless it has something to do with tax advice. So if you get a detailed bill from your lawyer and he's saying, well, I spent I billed you $10,000 and 40% of the time was spent on, this tax situation or that tax, well, you get a $4,000 deduction. It's going to go a long way to helping you pay that bill. Another thing that you may want to just jot down is that depending on settlement, any property settlement, when you get divorced, sometimes one spouse will give property to another. You may have to file gift tax returns. And again, pretty complex area, but I just want you to be aware that you may have a requirement to file gift tax returns. The other thing is, the IRS loves to challenge alimony. And why do they like to challenge alimony? Because it's a deduction on your tax return if you're paying it, and it's income on the other return. And the IRS is always concerned about cost shifting. Hey, maybe they're just trying to shift, reduce taxes as a unit. And, I've gotten involved in cases where the IRS has sent letters and saying, hey, we want to take a look at your alimony. You see, one, if you're paying it, see if you're meeting all the requirements of alimony. And there are 5 requirements to alimony. And if you don't meet those 5, they can challenge it. So just be aware of that. The other thing is really important is when you're getting divorced, sometimes your spouse may be doing things that you're not aware of financially that could be jeopardizing you. And I tell clients that you may want to file a married filing separate return if you think there's an issue with your spouse. Because if you file a separate return, you bifurcate yourself from them. Okay, they're going to be responsible for a tax fraud or whatever they're doing on their return. Unfortunately, it will probably cost more to file a married filing separate return. But the good thing is, if you reconcile and you decide not to get divorced, you can always amend those and file a joint return. You can't do it the opposite way. You can't file a joint return and then amend to file a married filing separate return. A lot of people don't realize that. It never hurts to file a married filing separate return, because you can always go back and amend and file a joint return. You only have 3 years to do it, but it can be done. Something you may want to suggest to your tax advisor or your attorney. The other thing is simple, but it's important, because I know a lot of people get letters. They're getting divorced and they get letters in the mail from the IRS to their spouse. You know what they do with those letters? They rip them up and they toss them in the trash can. So if you're getting divorced, you should file Form 8822, which will say, hey, I'm living at this other address. If you have correspondence to me, please send it to this new address. Because guess what? If you're in a hostile divorce and your spouse gets certified letters, you're not going to get them in all likelihood. Injured spouse allocation. Now, this is different than innocent spouse relief. A lot of people confuse the two. Okay, this has to do with refunds. Like, let's say you file a tax return together and you have a $5,000 refund. It's going into your joint bank account or your husband's bank account. And you're getting divorced and you're not talking to your spouse. He's going to get that $5,000 refund because it's going into his bank account. But if you file this 8379, what that will tell the IRS to do is, hey, that $5,000 refund, only put $2,500 in his account and put $25 in my account. Because remember, you were happy, all of a sudden you're getting divorced, those refunds haven't come in yet. You may want to file this return to allocate the refunds. The other thing is, an easy way to save. Sometimes I've helped people save up to $30,000 on tax returns when in a divorce, just by proper planning of the deductions for the kids. Because the way the code is set up, the Internal Revenue Code, is that sometimes the spouse with the least income gets the most benefit by claiming the children, because there's all kinds of plans the IRS has or the Congress has that they run through the tax code in order to get refunds. Okay, earned income credit. You can get up to $8,000 refund if it's properly structured. Sometimes the spouse with the income should not claim the kids. Sometimes the spouse without the income should get the deduction for the kids. And this planning, like I said, can save you up to $30,000. Also, you have to be aware that when you're receiving alimony, if it's not properly structured, you may be forced to recapture the alimony. So again, just be careful. If alimony is changing or fluctuating, you may want to talk to your tax advisor. Say, hey, is there a chance here that I may have to recapture this alimony? The next one is innocent spouse relief, Form 8857. And what this does is, if your spouse has legal issues with the IRS, and you file a joint return, technically you're both responsible for that return. What this does is it notifies the IRS that, hey, I wasn't involved in the cash business. I signed the returns, but I wasn't aware my spouse was doing this. Not always 100% effective, but it's worth filing if you think, because you don't want to have to go to the penitentiary because something your spouse did that you weren't aware of. So important to do this, to file that form. And last, once you're divorced, file a W-4 with your current employer just to notify them that, hey, I'm not married, I want to change my dependents or whatever, so that the proper amount of withholding is taken out of your W-2, so at the year end you don't have any surprises. Thank you for listening. If you have any questions, or feel free to call me or email me.